Okay, guys, so since the 24th of April until pretty much the end of April, so Wednesday the 30th at 1400 hours UTC, Cardano's ADA had dropped down by 10.9%. It's been a pretty interesting move to the downside, followed by a pretty significant bounce by jumping back up by 9.15%. So it's been pretty decent, but obviously we were talking about a potential long in the previous video. We were looking for an entry around here. Stop loss actually was really very reasonably tight, and we were looking to move out to the upside. Now, as you can kind of see, this would have been stopped out just here and then automatically reversed on us. Very, very frustrating, but it is a part and part of it. So we had this continued move to the downside. Wave 4 did in fact drop down a little bit lower, which means our wave 5 does actually have to go up higher. So the lower wave 4 goes, the higher that wave 5 goes. So in this particular case, we can now go reassess the situation here. It's possible that we haven't yet finished wave 4, and I'm going to get into that in a second. I'm just going to readjust this target for now though. So 76.66 to 80.11 cents. And then I'm going to go ahead and remove the fibs off the chart there. Okay, so what we're looking for now is a clean, decisive break above the previous swing high. Okay, so that was 72.9. We need to see a break above 72.9 cents in order to break this bearish move that we currently find ourselves in for the wave 4. Okay. So we look at this structure now as a 3-wave corrective move from down here. We'll go ahead and measure this distance, pull it across, and we can see here that there is, of course, the ability. I'm just going to go ahead and pull that right down to come down a little bit deeper, but it did actually reach its kind of minimum expectations, which was, well, minimum expectation was the previous swing low, but typical kind of expectations would have been between 1 and 1.236 on the fib scale. So basically 65.29 to 66.68, and this reverse to the upside confirmation of a more bullish run would be seen at 72.9. Even if we do have a retracement after that, it does mean that the wave 4 is highly likely to be complete. There's only really one scenario left after that to kind of continue taking you down, and I think that's got lower probabilities at this stage. So for the most part, looking very good, looking pretty strong. A good move to the upside, 9% after this correction to the downside. A little bit unfortunate that we got stopped out, but as a part of the liquidity hunting that goes on in the space. 3-wave drops everywhere and looking pretty reasonable. This move to the upside is quite an interesting one, so let's go ahead and break that down then. So as we kind of think about this, here we can see a very interesting kind of overlapping structures to start with, corrections, and then more impulsive, then break on down, and then continues. So let's go ahead and measure the initial distance, which looks to be this one right here. And you can see that we hit 1.618, but only most recently from that idea. And I don't think that's a good structure. So let's go ahead and take this down into a 15-minute time frame just to reassess this situation to see how this one currently looks here, because we need to kind of place this quite correctly. And, you know, actually it's quite interesting because it is possible. It is possible. Let's go ahead and just check this one here. It's a bit peculiar, but the internal workings are pretty interesting. So this one shows us with it not being bigger than wave 1, but wave 2 retracing. Just to do the due diligence here, guys, just because we need to obviously check to see how that kind of fits. Wave 2 is the shortest wave by the looks of it, which would basically be a pretty interesting kind of thing to kind of think about. Okay, so what I had in my mind was the expanding diagonal, but wave 1 would typically be your shortest wave in that particular regard, and it isn't. So it's not really that. It's not ending diagonal. It can't be leading diagonal. It can't be expanding, and it can't be, I mean, it could be contracting. It could be contracting diagonal at this end, meaning that we haven't yet finished. We still push up a little bit more, but it truncates and kind of falls short from there. Okay, so it could be that we haven't finished that wave 5. So what I'm trying to ascertain, guys, is whether or not we have some kind of extension going on here within this kind of move. And it's also actually quite possible that we actually have a beginning structure here. It's another scenario that could potentially be unfolding. So I should just give the clarity. Actually, that makes a lot more sense because we hit 1.618 there. So let me show you what that looks like, right? So it's possible that we actually go over 1, 2, 3, 4, and 5 truncated. right? We correct down, and then what we've got going on here is 1, 2, 3, 4 in a diagonal based pattern to kind of finish it off. And that's important because obviously that hits 1.618. We have the overlap with wave 2 and wave 1 and wave 4. So ending diagonal based pattern basically. Within there, then all of that can actually then start to get tied up quite nicely into bigger structures, specifically as we start to think about what this one here looks like so. And then outside of that, you then end up with this contracting diagonal right inside here that then leads us into this. So we have 1, 2, 3, 4, and 5. And then if we bring this out into view just a second, bear in mind this is a 15-minute time frame, so you're going to see a lot of volatility, but we'll be looking for something like that. Okay, so that means that we're not necessarily done. It's actually still a relatively bullish structure overall. So I like this idea. It's quite neat. Even though it's quite complicated because there are a few diagonal based patterns in here, such as the contracting diagonal at the beginning, the ending diagonal based pattern over this side, and also this irregular pattern right inside in the middle here with the truncated 5-wave pattern, which is an overextension within our wave 3 of that 5th wave movement. It's quite complicated. But it is quite a neat example of what's going on with those candlesticks. So I quite like it. It's an interesting one. We'll keep a close eye on that and see whether that plays out. Go ahead and remove all of that and bring us back to our hourly chart then. It does mean that we should expect more volatility, but we're not yet done with this move to the upside. So higher highs, higher lows, obviously simplistic way of kind of looking at it. Stochastic RSI almost back down in this oversold area, indicating that we might see a bit more of a lift to the upside. Going into the weekend, I do expect us to then start calling off. To me, it looks like 50 EMA, 50 SMA, 200 EMAs are likely to hold on this hourly chart. So we'll keep a close eye on those as well for any indications. We're in bullish territory on the relative strength index, plenty of room for growth. So we're not concerned there. MACD histogram has come down. So we do have bearish divergence, higher highs in price. But whilst we have higher highs, we have lower highs on that histogram. So this is an indication that things could potentially start to turn on us. And that's kind of also an indication of what we're looking at there with those finishing movements on the 15-minute time frame. Although we expect another higher high on this one. Okay, so we are looking for a higher high on price action, in my opinion, but it is going to be a precursor to a bigger kind of corrective pattern later down the line, probably. By the weekend, we should be thinking about corrections. So I'm looking for 72.9 to break higher, then 72.9, break that structure for the wave forward to the downside. And then looking for a correction to take us down towards the kind of 50 EMA, 50 SMA areas. So if we bring us back to a 15-minute time frame, then if we kind of think about all of those kind of structures that are going on, then we can be expecting this next move to the upside to be looking for 72.9 to 73.6. Okay, so with all that in mind, we can now be thinking, okay, well, if we have those kind of pushes, is it possible to trade this one? Probably. We could probably look to go long, but can we get a stop loss in a reasonable area? And that is going to be the question. I would be looking for just a breach of that area around 73 cents. And yeah, we could probably trade this one with a 1.64 risk reward ratio. Could be a pretty interesting one. Stop loss lower than a 50 EMA, lower than maybe even the previous swing lows. I'd probably look for bringing this down to 1.5 risk reward ratio. Stop loss at around 69.92. Entries at around 71.15 and take profit at 73. That could be a pretty profitable trade. I think that could be a very interesting one to keep an eye on. If I do trade this myself, obviously I'll be in the profit pit of the free Discord server that is linked in the description down below. In order to gain access to that, you join the free Discord, and then you just have to be trading with one of the exchanges that we have affiliate links for, with BitGet, Blowfin, BitUnex, etc., right? So more details can be found in the Discord server and in the description down below, so you can check that out. And obviously there, you'll see exactly what it is that we are doing and what we are actively trading. So very interesting kind of structures, I think. We should be expecting, though, once we kind of breach into these highs, that actually this is shorting territory. This is where we want to short. I don't think we're going to breach that existing high at the moment, and we'll come back down quite aggressively. So we will be looking for a pretty good short position, I think, but after we can finish this little move to the upside. Roll this up into a daily time frame, and on the daily time frame, you can see we are still, within this kind of boundary. Basically, lower highs, lower lows. Although we're kind of bouncing around a lot, and we are finding resistance on that 200 exponential moving average. You can see here on the daily time frame. we need to be aware that if we do push up a little bit higher and we can't close above that 200 daily EMA, even if we do briefly close above it, you can see here that it's been major resistance for us. So we expect this battle to continue. Our histogram here is actually doing us pretty decent favors, to be fair, on the daily time frame. We're not too bearish on this one. On the stochastic RSI, plenty of room to the downside. We can see it shifting around a little bit though, so expect to see more volatility, but ultimately we will be looking for a correction. And our relative strength index is in bullish territory, showing that we are looking for a strong reversal since our lows of early April. It's obviously quite key to see. We are still looking at that 76 to 80 cent range. So it doesn't really change all that much from kind of what we've been thinking about in this bigger picture. It's possible that we hit the 80 cents before getting the daily correction. So it's not bad. I don't mind what's going on here. We can see the accumulation is lower than it had been in March, but is significantly higher than where it was during 2023, 2024. So everything is kind of playing out quite nicely for ADA. It's doing some pretty decent things. Fundamentally, obviously, there's a lot going on, but also like from a technical analysis standpoint, it's looking pretty good. If we zoom out of this far enough, of course, you can take stock of the bigger macro positioning across the years. It's looking very good. We are looking for new all-time highs. $3.09 to $4.67 is the conservative range. The kind of medium range being kind of $5.27 to $12.91, and then moonshot range up at $38, which we're not optimistic about, but it's possible. So we kind of keep a close eye on it. Our kind of ending diagonal based pattern structure gets confirmed at $9.48, but we're not really going to be talking about that until we're kind of breaching past kind of $3 in my opinion. But it's interesting kind of structures going on overall. We are looking for 5 waves within the C wave to marry up with our 5 waves from our A wave. This will mean minimum expectation is a double top at $3.10 with the previous all-time high. We are looking at diagonal based patterns at the moment, simply because we have the ABC structure starting things off, which is typically going to be a wave 1 for the diagonals. It's possible, of course, that we're still in this B wave until we breach higher than the $3.10. That's always going to be what the bears are looking at. But ultimately, we're looking pretty bullish in 2025, in my opinion, going into 2026. Nothing here has really changed. And yeah, we're looking for new all-time highs on Cardano. So yeah, I think for the most part, it's just a case of, because of the diagonal based structures, we're going to be expecting to see a lot more kind of pump and dumps, a lot more liquidity being extracted from the market. If you found this video useful, informative, then do go ahead and smash that like button for me. Subscribe if you're new, and I will catch you all in the next one.